Hi, Kelly Fitzmaurice with the K Grant Group.
And I'm Hannah Canaletti with the K Grant Group.
We're here to provide you a market update.
I know it's been a while. I apologize, but we are here.
Me
We are
too.
ready to update you. And I'm going to go ahead and share my screen.
Let's get into it.
Okay, so we wanted to start by talking about the changes that we have seen from the bottom in December versus now. I think that's a lot of people's biggest question. What have we been seeing this year? So
well, absolutely. And, one of the things is our median price has gone up. It's gone up about 25K. We're still seeing things going for over asking price. It's at 12%. And let's talk about those seller concessions that are going on right now.
Yep. So lots of seller concessions. They have come down since December, just because as the market has picked back up a little bit, sellers haven't had to provide as many concessions, but they are still very much happening in about 41% of all transactions.
Absolutely. And I think if we go to the next slide, a lot of the indicators that we go off of, and I'll let Hannah kind of speak to this a little bit further, they're lagging indicators. So let's talk about that. Let's dive into that, Hannah.
And I think that's what a lot of the media kind of latches onto is all of these lagging indicators. So you have things like the Case-Shiller Index, for example. That is a 3-month moving average with a 2-month lag. So anything that they're reporting on is 2 months behind. So if they're reporting this month, they're reporting in May, but they're reporting.
We lived through May.
We lived through May already. And what they're reporting in May is for April, March, and February. So it's all data we've already lived through that market. We're very much moving on, moving forward. We're at a different time right now.
So when we look at other indicators that are current, we should be looking at new listings, right? So right now we're setting at below 12,000 on new listings. When we look at canceled and expired, for the entire year, we've had less than 2,500 listings expire, and those get picked up by other agents. Mm-hmm. We don't have any foreclosures. Building permits have slowed down a little bit, but that's honestly not a big deal.
A big thing to focus on is contract ratios. So what's on the market versus what's under contract. Right. That's a big leading indicator, as well as, like Kelly said, canceled listings, building permits, numbers of showings. Those are all leading indicators about what's happening right now and what we can expect to see in the next 30 days. One of my favorite memes right now. I think this is kind of what Kelly and I and everyone else in the industry are experiencing. This massive pent-up demand because interest rates are really just squeezing the hose and they're holding on to all that demand.
Are they? I feel bad for all of our lenders out there.
Yes.
But what are we kind of doing to combat that on the real estate side?
I think it's important as well, though, to touch on quickly that demand. I mean, when we talk about the market picking back up and the number of millennials that are looking to purchase, I mean, that demand is very much there on the sidelines. And right now, the buyers that are willing to make the leap and jump into this market, a lot of those concessions are what we are using to combat the high rates. So using rate buy downs to buy down those interest rates, bring it down to a more reasonable number. And so we have seen them kind of start to come down since January, like we mentioned. But in addition to that, we're seeing more sales above asking.
Yes. So now what is going on in the market? So we had more inventory. Like I said before, we're setting at below 12,000 on inventory. So back in December of last year, when we were setting in about 19,000 inventory, we were seeing that the sellers were taking less for their property and giving concessions. Now we're seeing that properties, if they're asking for concessions, they're going over list price and buying down that rate because it's all about the monthly payment and your affordability.
Right. And it's kind of a win-win in this situation. So Kelly and I have been using this strategy a lot where you can go in if it will appraise above list price. So the seller is still
appraise.
Yes. But the seller, they still get the net number that they're looking for. And the buyers then can take those concessions and use them to buy down their rate. So it's a great rate for the buyer. It's a good net figure for the seller. And it's really kind of a win-win.
Exactly. Because for the buyer, it's all about that monthly payment when you're talking interest rates. All right, next slide here, contract ratio. So we're having the same seasonality that we've had in the years past. Of course, in 2020, 2021, and 2022, those were insane markets. And we're back to what it looks like, wouldn't you say, Hannah, back in 2016, 2017, 2018?
Yes, and it very much is looking a lot like 2018 in particular, but we have the seasonality that we see over and over and over again, and you can see it on this chart all the way back to 2014. The seasonality is almost the same every single year, besides the chaos that was, 2020, 2021.
I don't want to look through that.
Yeah, no, I'm good. I'm good on that. But you can notice as well that it is advantageous for buyers September through December, because our contract ratios do tend to slow a little bit. Sellers tend to get a little bit discouraged. They're ready to get rid of it before the new year. So keep that in mind as we move into the fourth quarter, that September through December is a great time to be a buyer in this market.
All right, let's dive into a little city by city. So anything above 100 on this report, Hannah, let's dive into that a little bit more.
Yes. So the Cromford Market Index, anything above 100 is considered a seller's market. Anything below 100 is considered a buyer market. So you will see some red on this chart where some of those markets are slowing down a little bit because they did pick up so fast this year. But slowing, I mean, Fountain Hills is a 244 on the Cromford Market Index. So they're sitting at a very healthy seller market. And you'll just kind of see that there's still, Chandler in particular is just wild. I mean,
absolutely. And it depends on who your client is too, because some of our clients are not getting out in this heat and looking at stuff. They're going to wait until the summer's gone. We don't have record-breaking heat right now. So we're not out there I'm still out there showing, you're still out there showing in this heat, but some of our clients are like, I'm going to wait until October to jump back in, right?
They're out of town. They're like anywhere but here. But then, and that can be a reason for some of these markets kind of starting to slow just a little bit. And to put it in perspective, slow, but not drop in price, none of that, not drop out of a seller's market, but they're just not increasing as substantially as they were earlier.
Right, exactly. And as soon as those temperatures come down, we're right back up into that curve until we hit holiday peak.
And Queen Creek and Buckeye, Kelly will touch a little bit on this, but kind of why they're at the bottom of this chart.
Yeah, well, so that's where we have all of our building going on, right? So Queen Creek is right way out here, and then Buckeye is way over here. So that's where the builders are. So you're competing with a lot of new builds versus resale. So that's why that looks like that. And those are just in a balanced market. Queen Creek is just a smidgen above. So those have actually done really well since the beginning of the year.
Given that the resale market is a little bit less. So,
yes, absolutely.
And that's kind of in a nutshell, a little bit what we're seeing. Obviously, our market is still heavily influenced by interest rates, but we talked a little bit about ways that we can combat that. But we always encourage you to reach out to us with questions. Any of this information, if you want further explanation or you want to get back out there and kind of jump back into the market, we are ready when you are.
That's absolutely correct. We're here to help always.
Thanks so much for tuning in. We'll see you guys soon.